sale. So a couple of years ago, people loved the BRICs, the Brazil, Russia, India, China. We couldn't afford much of them then. Now they don't like those areas. We're finding a lot of value. Brazil, Russia is one of the cheapest markets we've ever seen. India and China have some good spots of value. Korea has a lot of value. So those in particular.
Wow, so at a time when Morgan Stanley's Richard Sherman was saying, stay away from BRICs, it's so yesterday, you're saying no, today's the time to get into them.
Absolutely.
But what about playing it through multinationals, such as Caterpillar, as opposed to, or do you go right into these emerging market and buy the companies themselves?
We will do both. There's been plenty of times in the last 10 years where most of our emerging markets exposure, if you will, was through multinationals that were based in the U.S. or based in Europe or based in Japan or Australia. But right now, for the first time in a long time, the best values are right in the emerging markets, really good companies.
And take a look at your cash position. You're about a quarter of your fund was in cash just a few months ago. Right now it's just 10%. So are you seeing opportunities now to deploy that cash?
Two answers. Yes, we're seeing lots of opportunities around the world. The overvalued pockets are small, but there's a lot of value around the world. But more importantly, that cash is misleading. Our cash tends to be between 0 and 10. We've just started up the fund a few months back. We've been fortunate to have some nice inflows in the fund, and so the inflows came and hadn't been invested yet. So, but no, we should not have more than 10% cash on any basis.